I started, focusing on courses in finance and accounting because that's literally the language of business,
Yeah.
right? If I understood the language of business, then I should definitely be rich, right? Look at Warren Buffett, look at Bill Gates, look at all these people. They must have a background in these studies. They were leveraging a lot of liabilities. I don't know how you were growing up, but my parents were, well, not my parents, my, uncles, they were like aunts against, opening a credit card. Like, don't use a credit card because
Yeah, in Black America is the same thing. It's like our understanding of debt was like it's bad. Stay away from it. You don't get a credit card because then you're going to spend it, and then eventually, when you become an adult, you need a credit card. You get a credit card, and you didn't get the guidance to how to properly use it. What's going on, millionaires? It's your guy Kai Speaks back for another episode of the $1 Million Mind podcast. You are here in the right place if you are looking for opportunities to not just grow your pockets and escape the rat race, but just to live a life that you truly, truly desire. And we got a guide. Our guest today is I would say one that's equipped to get you a little bit closer to that lifestyle, right? Especially when we talk about our solopreneurs and our aspiring entrepreneurs. We always talk about the plight of trying to start a business and run a business with your own money and how it takes so long, right? Especially if you're working at 9 to 5 and you got bills you gotta pay. You living already off of 70% of your income, and you got to put like 20% away to grow your business. Well, the guy here is the guy with the plan, the man with the plan, who's going to help you kind of get that funding. He knows a few things, a way around, helping you increase your credit profile, make you attractive to lenders, and even some banks, right, that might even be more attractive as a small business owner than the ones that you might know about, right? So I want to have this conversation with our guest for today. We got Phil in the building. Phil, tell our listeners a little bit about you and how you got into like credit, finance, and and just helping people make themselves more attractive when it comes to like borrowing, getting the funding, and getting the finances together for business and stuff.
Ooh, well, thank you for the introduction.
Yeah, absolutely.
That was really nice and detailed. So, my name is Phil Gotti. I'm a credit repair specialist. I got into this space because, I come from my background is, first generation Nigerian American. And I've always wanted to make money because, I spent a lot of my childhood just going through it financially. My parents were actually like, middle class in Nigeria, but, hard times fell. Both of them passed away when I was like 8 years old.
Wow.
So I've been an orphan since I was 8 years old and, came to America. And, it was always considered, the land of opportunities. And I really feel that way. When I came here, the goal was always to, make money and help my family back home. And as soon as I came here, things were not as rosy as I assumed they would be.
Yeah.
But, fast forward, went to college in West Virginia University and studied, wanted to be an accountant. And sadly, did not finish with that degree. Ended up doing business administration with, a minor in communication. But, just kept working through, the struggles of life. Started my professional career in logistics and supply chain management. I just couldn't keep up with the rat race, man. And at some point, I just figured the only way to understand finance and to get into this credit space was to actually invest in my education, get a mentor. And that's what I ultimately did. Read a few books about credit, and the rest was history. And that's how I got here today.
Wow, man, that's a powerful story, and I kind of want to like back up a little bit to really understand like the position that you were in as an 8-year-old boy too, like coming over here to a new country, having this understanding of like this is a place where it has the most opportunity. And it's not necessarily panning out for you. At what point did you notice that, right? Because at 8 years old, right, it's not necessarily, you weren't necessarily thinking about business then, right? What was that transition like from 8 years old, and to what point did you start like shifting your focus on business, making money, lifestyle design, and just creating the life for yourself that you wanted?
So that shift actually started when I graduated high school. So my objective was to play Division I, whether that's basketball or football, and I ultimately didn't happen for me. So the next objective was like, I need to make money because, the professional athlete career wasn't available to me. So how am I going to make money? Right? How am I going to help my siblings in Nigeria? So I started, focusing on courses in finance and accounting because that's literally the language of business,
Yeah.
right? If I understood the language of business, then I should definitely be rich, right? Look at Warren Buffett, look at Bill Gates, look at all these people, or people that, in Wall Street, they must have a background in these studies. So my focus was there, but after, so much difficulty with, whether it's the extra courses you had to take and, the standard that you had to meet and just falling short in those, requirements, the journey continued from there. Like I'm always I've always been a learner. So whether or not I failed in school or didn't get the grade that I needed, I was always doing research online. I was
Right.
always asking questions. My uncle, he's an accountant, and I would always pose questions to him about financial statements, things like that. And even after undergrad, I took a little bit of time in grad school studying masters in accounting, and picked up a lot from there and realized like, just simply making cash wasn't enough to sustain yourself. Like when you get into accounting, you understand how businesses really leverage, loans and on the accounting equation is assets equals liability plus equity.
Right.
Right. So the liability side, some of the companies we know today, like not Starbucks, Dunkin' Donuts, if you look at their balance sheet, at least at the time that I was looking at it, they were leveraging a lot of liabilities to grow the business. And they say America runs on Dunkin'. So I'm looking at that.
And
I'm like,
Duncan ran on. Right.
So I'm looking at that. I'm like, okay, so we get this, I don't know how you were growing up, but my parents were, well, not my parents, my, uncles, they were like aunts against, opening a credit card. Like, don't use a credit card because...
Yeah, Black America is the same thing. It's like our understanding of debt was like, it's bad. You stay away from it. You don't get a credit card because then you're going to spend it. And then eventually when you become an adult, you need a credit card. You get a credit card and you didn't get the guidance to how to properly use it.
It's all about mentality. So it's strategy. So if you're using a credit card in a way where it's actually helping you build credit and also you're using it to get business funding, ultimately, you understand the enormous power that it has. So being somebody who came from, living paycheck to paycheck in that rat race, like a lot of people out there are, it wasn't enough. So that's what really like forced me and narrowed my focus into making sure like I fully had a holistic understanding of, how this financial system works. And just to conclude on that question, like America right now is considered one of the, or is the wealthiest country in the history of the world. And we have the largest debt, right? Our money is not backed by gold or silver. And America internationally is still considered a superpower. So how are they able to leverage so much debt and still be in a position that they are? And so many of the people in our community are afraid of debt or don't even fully understand how it works.
I want you to break down again on that balance between, you said assets equals liabilities plus equity. Break that down for the everyday person and how that also relates to them.
Yeah.
Because in my mind, I'm thinking, okay, assets equals liability plus equity. That means your assets equal the way that you're able to leverage debt or liabilities to bring some type of cash flow and equity into your life.
Exactly.
Right. So, i.e., houses, i.e., cars, things that most of us look at as purely liabilities.
Yep.
There are newer ways every day on how you can take this liability and get some type of equity from it.
Absolutely. So, in a sense of the accounting equation, the asset side, like you mentioned, your home, right? Your home, you're building equity when you're paying your monthly payment every single month on that house. So on the balance sheet, that's your own cash reserve. That's your money. The house is the asset. Now the liability is the mortgage that you took out to get that asset. So the equal sign is creating a balance between what you're looking at on both sides. So the house equals that mortgage plus the amount of cash you've put into that property. The same thing as if you get a vehicle. I have a car outside. That car is being financed. So that financial, contract, that's the liability. The amount of monthly payments that I make on that vehicle, that's the equity. So if I finish making all those payments, I'm going to own that asset, which is the vehicle. And this vehicle gets me from point A to point B. It allows me to come in to do interviews and allows me to go to the office to conduct business and all these things. So, it's how you look at it. Some people are like, a car is a depreciating, depreciating asset. A lot of things are depreciating assets, but at the end of the day, it's how you use it to generate revenue. And for me, being able to get from point A to point B to conduct business is helping me financially, and it's helping me and my family as well. So.
Nice. That I appreciate that that breakdown too. But I'm even like seeing it now, where like there might be a conflict on a house in most cases, actually, particularly for a lot of our family members, is like how that balance sheet won't equal on one side, right? Like, especially if you got the asset side here, most of it is heavy on the right side with the liabilities and equity heavy on the liabilities part, right? So like, not to, get too deep into it, but how do you balance that out? Because I've been removed from accounting for a while.
Oh, yeah.
How do you even begin to balance that out, and transition all those liabilities into assets?
So to bring it to credit, right? You're fixing your personal credit and you're getting business funding, right? You got yourself a business credit card for $40,000, right? So now you have this card that you can now use to purchase an asset. That asset you purchased, you want to be strategic and make sure that that asset will generate you revenue, sales, right? So now that you have that asset and you're conducting business and you're generating revenue, ultimately what you want to do is have the equity side grow to the extent that the liability side diminishes. So now you have that ownership, something that is very important in terms of, stability in your household, in your business. You got to own it. Otherwise, you're just going to keep living in that, debt to income cycle of just always paying somebody else versus owning the asset yourself.
That's a good answer. I want to transition just a little bit over into because you mentioned, imagine taking out this business credit, right?
Yes.
But before you can even get there, your personal credit got to be right, what I understand.
Oh, yeah.
And then we just had somebody on here who delved into the personal credit side of things a little bit more. But let's say you do have an okay, personal credit history. Mm-hmm. How do you then make yourself attractive, on the business side of things to be able to start getting business loans and stuff like that? Is there a formula or steps that you want to take from as a consumer to be able to say, hey, I am an attractive lender or borrower for this business funding?
So from personal experience, if your credit is okay, I would tell the listener to get an actual accurate report of what's being reported on your, consumer disclosures. So what you want to do is go on annualcredit.com. You can get these for free. And you want to pay attention to how many primary accounts you have, right? When it comes to business funding, you want to have at minimum 10 primary accounts. And these primary accounts simply mean these are accounts that are directly under your name, and you want it to be a mixture, like a student loan, an auto loan, mortgage or rent, secure credit cards. And you could also apply to certain credit builder services like Self, Credit Strong, Rent Report, or Rental Karma. All these will strengthen your overall profile, and you want to kind of go down the list from there. Next step is you want to pay attention to how much utilization you have on your credit report. So if you're spending a lot on your personal credit cards, you want to pay that down to at least 30 or 10%. That's kind of the sweet spot. And then you want to navigate to how much credit history have you had throughout your, life. You want to have at least 5 years at minimum. And from there, you now have a strong profile, right? Excluding, recent inquiries. You don't want to have too many, but overall, you want to look at that profile. And if you need to build it, you want to make sure you do that before going to apply for business funding. And just to go a step further, if you're someone who, are an aspiring entrepreneur and you don't have an LLC, but you've been conducting business just with your personal bank account and, personal address and everything, you don't want to do that. You want to structure yourself an LLC. That will create some level of security between you and your business. So you're not personally liable for everything that is happening in your business. Say you go into a bankruptcy situation, your money, your personal money is not being affected. It's going to be that of the business. So that's kind of the mentality you want to have when it comes to business funding. You want to make sure your personal credit is strong enough. You don't want to go in with just an okay credit report. You don't want to entirely focus on just the score. You want to pay attention to the factors of the report itself, like the total account numbers or total primary accounts, the utilization, the amount of inquiries, your credit age. All those things are what's going to matter ultimately for business funding.
Yeah, no, that makes sense. And you mentioned how the credit history was important because that's like 30% or 35%.
Yeah, it's around that. Yeah.
So what happens to the person that doesn't have those 5 years of credit history?
So when you don't have enough credit history, it's almost as if like you're going to borrow money from like a close relative, right? And they know you're this great guy, you know what I'm saying? Like you graduated college, you had good grades and everything, but in terms of like money, you don't have enough experience in that realm. So it's like, how can I give you so much money if I don't really see any history to show that you've, made a lot of payments throughout the course of time? You're considered a very high risk individual because of the lack of, information on your history. So that's going to have a negative effect when it comes to getting approved for funding. And I've seen this happen to close relatives. I've seen this happen to my wife. She had a 7, like 10 on her TransUnion, and she goes to apply for an auto loan and they deny her, and the adverse action letter specifically says you don't have enough history, enough revolving history.
Even despite having a 710?
Yes.
So all right, that's kind of like, is there no way to remedy that? Because at the end of the day, if I'm just now starting in life, right?
Yeah.
It's basically saying like you can't borrow if you have not been leveraged. It's like the jobs, right?
Yeah.
We can't give you a job because you don't have enough experience. But if all the jobs are saying that, how do I get the experience, right? So if everybody's saying, oh, you need 5 years of history, where do I get the history from if I can't borrow from nobody? You know what I'm saying? So how are people able to remedy that? Is there a workaround? Is there like something that people can do where it's like, okay, I may not have 5 years of history personally, but this is something else that I can do to maybe, get the car, get the funding or anything?
When there's a will, there's a way.
Okay, all right.
So when it comes to building credit history, you want to focus on credit builder accounts like Rent Reporter or Rental Karma. So what they allow you to do is pretty much leverage like your family members. Say you've been living with your mom and you've been paying rent since you were 15 years old. You can use that information, put it on the application, and have your mother verify the accuracy of that. And now Rent Reporter or Rental Karma will now start putting that on your credit report. And overnight, you could go from someone with like 2 years of credit history to now 5 years of credit history, simply because your mom, confirmed that you've been living in that household and you've been paying rent since you were 15. And there are a lot of people who've been in that situation. My cousin, before he even went to college, he was paying rent at home. So throughout that period, he was
actually paying rent or paying rent?
Well, paying rent to the household, like helping out my aunt, because I lived with my aunt, in my life.
Oh, so your aunt and uncle were already here in the States.
Yes.
So when you left at 8, I
came to.
Gotcha.
Yeah.
Okay.
So pretty much like my cousin, who went to school in Massachusetts, whatever, was pretty much paying rent in the household, so contributing to the overall well-being of the house. And if he was in a situation where he needed funding and wanted to build his overall history, he could literally use that information and go to a service like Rent Reporter, Rental Karma, create that account, and now he has, positive history with credit.
Wow, that's a play.
Yeah.
I mean, I'm even thinking like even for like parents who just want to set their children up so that by the time that they are able to like borrow, then they have some type of history.
Oh yeah.
That's a play, man. I didn't know about that. But it's. Are you a fan of like authorized accounts, like being like putting yourself on somebody's
Definitely.
profile as an authorized user, like a credit card or something like that?
Yes. So the difference between like the authorized account makes it a secondary account, right?
It's not a primary account.
It's not a primary account, but it still helps you in terms of that history if that's the only factor you need to resolve. So yeah, to answer your question, that's also another way to go about it is becoming an authorized user on someone else's credit card who has a lot of history, because now that will increase your average history.
But the 5 years, preferably, they want it under for primary accounts.
Yes. So if it's like this, if you have everything in great shape and maybe just one blemish, right? Say you have 10 primary accounts, you've exhausted Rent Reporter, Rental Karma, and they only got you to like 4 years, but you kind of want to get over to the 5, 6, you can then add an authorized user, like someone with great payment history. You want to make sure that person has great payment history before adding them to your credit. That would then, to lenders, they're looking at, okay, this person is essentially like 99.9% perfect, right? So for them, it's almost as if like, I'd rather make business with this person if they have everything else going on. I don't want to lose out on this business opportunity to make money, right? Because they're in the business to lend money anyways. So why not extend credit to somebody like that?
Wow, I didn't know that. So the authorized user works both ways. It's not like, so I was thinking like, okay, if I want to get better history on my profile, then I want to add myself to someone who has had, let's say maybe you had Discover for like 6 years, has a high balance, and you have great payment history with them. So it's like it's a positive impact on your profile.
Absolutely.
I'm thinking, okay, if I ask Phil to add me to his Discover card as an authorized user, I've heard of ways how that impacts me as well. It sounds like you're saying the opposite. Like, okay, Phil has great history. Yeah. Let me add him as an authorized user on my card, and that affects me positively as well.
Absolutely.
So it goes both ways.
It goes both ways.
Wow.
And if you're someone who might be, say you're the person with leverage here, you're the one with the credit card with great payment history and all that, and you're trying to extend that favor to me, you don't necessarily have to give me a physical card.
Right.
I don't have to go and spend. You just have to make me an authorized user on the account to be reporting on my credit report. So now it's a win-win. You're not at any risk. I'm receiving tremendous benefits. And now when it's time for me to get funding, I'm nothing but grateful for your help.
Yeah. And does it take a certain amount of time before that is like being reported on your credit? Like, this is not something you can like, I do it and then tomorrow I got great credit.
So it could happen tomorrow. It could happen that fast with services like, credit builder accounts like Rent Reporter. But typically, credit reports have a cycle of 30 days. So pretty much a month. Usually for things to be accurately updated, it usually will take 30 days. For instance, you can make that authorized user action and it's showing on Experian, but it's not yet showing on Equifax or TransUnion. So sometimes people have that experience where it's like, how come it's only reporting on one credit report but not the others? It's because that cycle has to fully go through, because they all sort of operate on different times of when they actually report it, but it shouldn't take more than 30 days for you to see that reflected on your credit report.
So that makes sense on why it might be beneficial to figure out who a lender is pulling your report from.
Yes.
Before. How do you find that information? Because I hear people say, you want to make sure they pulling from Equifax, or you want to make sure they pulling from Experian before you apply. Like, is it plainly, like, where do you find that information out before applying for?
Go on the internet, look up the phone number of any bank, give them a call and ask to speak to the lending department, and just ask like, hey, I want to apply for a credit card, but I would like to know beforehand which credit report you're pulling from. And that's information that they will freely give you.
And they don't look at it as like suspect or anything like
No,
that.
no.
Okay.
Because they want to do business.
Right.
It's like
Yeah.
the information. It seems like we operate on this fear based.
Yeah.
So it's like we don't take action, and it's like fear paralyzes us from doing things. But honestly, it's not as bad as people perceive the things to be. Like even when it comes to fixing your own credit. Right, people are like, well, I'm the one who like took out this auto loan, so like now it's been repossessed. I don't want to dispute it because technically I'm lying and whatnot. But this is the beautiful thing about America. America is a country of laws, law and order.
Yeah.
Right. So we have this thing called, we have the Constitution, and we also have like judicial, procedures and laws that have been passed on over time, right? When you look at the Fair Credit Reporting Act, the whole purpose of that is to give consumers power over these financial institutions. So you may think just because you took out a credit card and you defaulted and that card is now in collection, that it has to be on your credit report for 7 years because, Bank of America says so, or, Experian, you spoke to them and they said so. That's not true, because those are policies, and law supersedes policies. Right. What you want to do is get educated on consumer laws. Do a little research. Go on Google real quick and type in 15 USC 1681, and from there go into the rabbit hole, and you will start to notice the amount of power we have as citizens that we don't leverage every single day. So be intentional. I'm not asking you guys to go liquidate a card and just dispute it. You know what I'm saying? But if your back is against the wall, you can't find the money to pay off this collection, whatnot. Go through your credit report, look up the inaccuracies, see the errors across the board from Experian, TransUnion, Equifax. Is the account number fully reporting? Is the account date the same in every single report? Is the balance the same?
And at the end of the day, as the consumer, I'm finding out that if you don't want it reported, it doesn't have to be reported, especially if they haven't done certain steps.
Yes.
To like I think when people say inaccuracy means that if I did it, it's accurate, right? But an inaccuracy could mean that they didn't send you a certain letter, in the mail within a certain amount of time. Like, okay, well, that now makes it inaccurate.
Well, it's the whole thing about, the English language versus legal language.
Yes.
Right? So in the English language, we think that's the same thing lawyers are using in court, when in actuality it's not. You're operating in a system that is completely different than the system we're using right now in this conversation. So when someone says something is incomplete legally, you're saying there's omission, like, there's X's or asterisks on the account numbers, which in a sense is showing a form of, unauthorized information, because it's like, how do I know that account number is the same account number that I look on the dashboard of my, credit app? That could be anybody's.
All you saying is we got the same last 4 digits.
Yeah, exactly. so it's like at the end of the day, you have to like kind of educate yourself a little bit more on some legal, jargon. You don't have to become an attorney or a lawyer to actually like educate yourself in this area. It's actually a beautiful thing, not being in that, industry, but still having some knowledge about how they operate. So that gives you power when you get on the phone with this credit reporting agencies, and you're asking them to remove something because it's violating the Fair Credit Reporting Act.
Yeah. And if y'all want to go down that rabbit hole, y'all could really just start in the episode we just put last week, right? With Durain, man. He really goes into those consumer laws. Mm-hmm. What you feel, I want to talk about, like, from your experience, like some of the banks that are out here, because I've been doing some deep diving, and I see some information out here that is kind of like unfavorable, and like I've experienced even like some of these, like some of these frustrations that I'm seeing, specifically with banks like Wells Fargo and US Bank and PSE Bank, on how all these banks have been scored below the industry average as far as like the American customer satisfaction index, like this index that is basically created to rank for consumers to see, like, are these people like satisfying the needs of the consumers pretty much. And they are like under 70%, under like 60%, some of them. Have you experienced like where certain banks are just kind of like harder to deal with or just not ideal for, what you're trying to accomplish as a business owner and for some of your clients as well?
Well, in terms of banks like, that you just mentioned, PNC, I actually think PNC is great for first-time business owners. PNC has this program, or not a program, but like you can get $50K on your first, business credit card with PNC without any documents.
Wow,
right?
no
They're
doc
not.
funding.
They're not. There's a no doc program. That's what I meant to say. They don't have. They're not requesting that from you as a first time business owner. So in terms of like generating sales and all that stuff, they don't need.
They don't need that. So what do they need? You got to sign. I'm assuming you got to probably sign as a PG.
Yes, you got.
So you got your personal credit got to be
great.
Gotcha. Okay.
Got to be great. Your LLC got to be structured accurately, and then the figures that they're looking for is your projected revenue. So when they're asking you like, how much are you making a year, they're in a sense asking you for the projection throughout the whole 12 months. So if you think your business is going to make 100K, you're going to put 100K. Now, obviously, there's a law of diminishing returns. If you think the more revenue you put on that application, the more funding you get. And that's not necessarily true, because if you artificially inflate how much you really think you're gonna make, then they might ask you for some documentation. They're like, man, we're in January and you're presuming you're gonna make 400K. Like let's see some of that paperwork. But if you only put in like 100 or 150, then it's like, okay, that's reasonable. A lot of people work W-2 jobs and they're only making that. So that's kind of my experience with PNC. So I think they're great in that aspect.
Like that's the sweet spot. You're saying like 100 to 150K, especially if you're a new small business.
Exactly.
Right.
Now, with the more history you have with your business, so if your business is at least 2 years old, now there's even more opportunities. PNC is giving out 150K line of credit. So, in terms of kind of what's being reported in the news versus what's happening in the business world, I think it's completely different, because a lot of times, these banks aren't just for business owners, they're also for consumers. So consumers are reporting, experiences that, that weren't satisfactory, right? But you as a business owner, you can't have the same mindset as a consumer. You got to really understand what's going on, right? The other bank you brought up was Wells Fargo. Wells Fargo is also giving 150 plus to new businesses without any docs, right?
Wow.
I can't remember the other bank you mentioned, but like, for instance, what you want to stay away from if you're using the personal guarantor method to get funding are banks that report to your personal. So on the business side,
when you specifically looking for business funding,
because the whole idea of getting business funding is to avoid that utilization trap
with your,
on the personal side, because you can max out your business credit card, and in a sense they want you to grow your business, they want you to buy supplies, they want you to pay employees, they want you to purchase not purchase marketing, they want you to spend on ads and things like that for your business, so your business generates revenue. That's the whole objective. It's not just for you to hold it and pay like your utility bill here and there but if you're someone who's using your business credit for that, that's also a plus, because now you're not in that same situation that you were when you were only using your personal credit card and you had, 50% utilization and watching your credit score drop, significantly because of how much leverage you're taking on the personal. But that's kind of what you want to do as a business owner, is you want to look for banks that will work favorably for you as a business owner, not necessarily what news is being put out there about consumer satisfaction or dissatisfaction about a bank or so.
So for these banks that do offer this no doc funding,
yes,
and you have to have a PG, and you said that the score has to be great.
Mm-hmm.
What does that look like? What does a great score look like that will put you in the game for that PG? And then you also said the LLC needs to be structured.
Mm-hmm.
What does that look like?
Okay, so minimum you want to have at least a 700 credit score. Now some lenders, they're not they're not sticklers to have at least a 700. They want a 680, but the whole data points got to be on point when it comes to like the amount of total primary accounts you have, your utilization, your credit age, how many inquiries you have, some of them, that's their main focus. But if you have all those factors, intact, your score should be up. It should be above 700. 700 is the minimum.
Yeah.
Pretty much. So to answer that point, you want to have at least a 700 credit score before you should feel the confidence to just walk into any branch and apply for funding. The other thing is,
when you said walking, you want to do this in person, not online.
you could do both. So
Okay.
some banks do offer you both in person and online, like Truist. Truist, you can go in person. I mean, every bank you could pretty much go in person and apply for a credit card, but some of them do have online ways to just apply. Bank of America, you can apply online. American Express, you can do that online. PNC Bank, you got to do that in person. What's the other one? I just forgot. So Truist, I was going to use Truist as an example. Yeah, you could do a pre-approval with Truist online and know before you have that inquiry hit your credit report, which is a beautiful thing, right? So if you're someone who might be on the fence and, your credit might not be exactly where it is in terms of the information that I'm giving you here, but you just want to pull the trigger, you can do a pre-approval with PNC and know if you're approved before actually having that hard inquiry. Now, to answer the question about the LLC structure, my way of structuring your LLC is, starting with the name of your business. You want to avoid business names that put you at a high risk for lenders. So anything that has to do with marijuana, you don't want that in the name of your business because they're going to be like...
That's just common sense, right?
Absolutely.
Common sense ain't so common.
Absolutely not. We're not helping no marijuana business. So anything like controlled substances, you want to avoid that. Things that are like adult entertainment, you want to avoid that in the name. So there are lists. You could go on Google and search high risk business names, and you will get like different results, and you will notice the trend. But what you want to focus on in terms of your business names are general names like enterprise, consulting, marketing, e-commerce. Those are the names that lenders want to see because it doesn't pigeonhole you in one specific industry. It's like you're flexible. You can do business with pretty much anyone, and to them, that's considered like a low risk, industry that they would love to work with. Moving from the name, is you want to make sure when structuring your LLC, you're not using your personal information like your home address, your personal email, your personal phone number. You want to make sure you have a business phone number for that, or for your business, for your LLC, a business address for your LLC. And some people are like, damn, like that's so expensive to rent out a space for my business. Like I can't do that. Well, there are platforms out there like Regus, Regus, iPostal One, that you can go to and get a virtual address, but it's attached to a physical location that you could pick up your mail and letters from. So when you get that business funding and they send you that card, it goes to your business address. They know it's official. Business email, Google Workspace or GoDaddy. That's a way to get a domain name and then convert that into a business email and use things like info or services, consulting, those types of names for your email address. So it's info at, yourbusinessname.com, .org, whatever. Services at yourbusinessname.com. So that's what you want to do. And phone number, I use Freedom Voice personally. Very low monthly payment. I have a 1-800 number with them. I pay them like $9 to $10 every single month to have that.
And you think a 1-800 or 1-888 is like ideal? Not
Yes.
like, because like I've even heard like some people make I even made the assumption that business number different from mine as long as I just got a different phone number, right?
No,
like a 40, if I'm in Atlanta, 404 or 678 or something like that. You said you specifically want a 1-800
number. Yes.
Wow.
Yes, because
Okay.
it makes you look serious. It gives your business more credibility versus just using a second number, because that could be your spouse's number, that could be your friend's number, that could just be a free number you got on Google,
on your Google Voice,
or one of these
some shit.
apps that allow you to generate a free number. So like to them, you got to think of it, these lenders, when they're giving you funding, they're doing their background research, just like when you're applying for a job, right? They want to know a thing or two about who you are. So they're doing a background research on your business. And even on the application itself, these questions will come up. They're asking you about business email. And, after you fill out that part, you're going to get the personal information too on the application. So if you're duplicating the same email on the business as a personal, they're not going to think you're serious. You're going to get rejected just because of a minor fix that you could have, solved before even applying for funding.
So I'm hearing you want to have a 700 credit score minimum. You want to make sure your LLC has a business email, meaning at something.com.
Yep.
And then you want to have a business phone number, 1-800 preferred. And then the address, you want it to be the physical location. You want it to be an actual business.
Absolutely.
You don't want the physical location to be pulled up on Google and it's a house.
Exactly. You don't want it to be like a Staples, right? When you say business,
so even you don't even want it to be a Staples or a post office.
No, you don't want it to be that. You don't want it to be a P.O. box. And even on applications for business credit cards, they will specifically tell you, don't use a P.O. box. So
and that's crazy because even the credit reporting agencies that we use to run our credit use P.O. boxes.
I mean,
that's crazy. The system we live in, right? The system we live in.
They're on a different level, so they can do whatever they want. I mean, at this point, it's like they're such a cash cow that they probably don't need fund. They're probably banks in their own realm. You know what I'm saying? They're selling our sensitive information to banks.
Inaccurately.
You know what I'm saying? So they're making plenty of money. They don't need funding. There's like we got enough cash flow. We're good.
Yeah. So help me clarify the difference to like between a line of credit and a credit card, right? Because you said how like some will get like no doc funding. You can get either a credit card with some of these banks, or you can get a line of credit.
Yes.
What's the difference as far as like use cases? Like, do you use this money differently? Is there a time difference that you'll receive the credit card versus just the line of credit? Like the line of credit, I'm assuming just gets wired to your account.
Exactly.
You get it. They give you a business account and then they just wire the funds.
Exactly.
Versus the credit card is just kind of like
physical card, just swiping it.
Gotcha.
So in a sense, they both work in the same way. The line of credit, some lenders, they don't offer the line of credit, right?
Until maybe like 2 years, right?
Sometimes.
Okay.
So some lenders I know, they don't have the line of credit option. They just have the business credit card option. I have a whole list of lenders that, specifically give you the line of credit versus the business credit card. But at the end of the day, those are the best options when it comes to new business owners. You want to use those two forms of capital when it comes to growing your business. I'm sort of opposed to business loans because the way credit works is the interest rate is applied to the amount that you use up versus the total balance. So to simplify that.
But the line of credit, isn't that all? That's a business loan, right?
No.
Oh, so the line of credit
It's not a business
loan. So the line of credit is similar to a credit card. The interest is what you use.
Exactly.
Versus the business loan, it's like the interest on the amount that you borrow.
It begins before you
even swipe that card. You got to make payments.
Exactly. And that's kind of the downside.
Well, that's because you're not swiping nothing. They just literally just sent you the money in your account.
They sent you cash into your account, and you're using your debit card to make purchases. But the interest rate is already applied to the entire amount.
Right.
Versus on a credit card, if the interest rate is 10% on a $20,000 card and you only use $1,000, that 10% is only applied to that $1,000.
And in most cases, that 10% you don't start for like another 12 to 18 months.
That's the beauty of a lot of promotional periods. Like with Chase right now, I don't know if this has always been a thing, but I know right now Chase, Truist, they have like up to 0% for 12 months. 12 months. Some of them is up to 9 months. I've seen as much as 18 months where you are literally at a 0% interest using a card. So think about the amount of, opportunity you can generate with that. Now that, interest rates are high in every, industry and currently that we're in. If you have a 0% interest card, knowing that you can grow your business in this window and get that money back, like that's a win-win versus opening up a credit card at 18% without even having that much of a high limit and struggling to pay that back
Right.
because the interest is just killing you.
Yeah. And what I like about it is, like, let's say you get this and you still need a little bit more time just to figure out on what that play is for you. That's going, like, what can I use this money towards that is going to, give me my return or give me, it'll give me that money back plus some before. I mean, granted, you still got 18 months that you want to take advantage of that promotional period, but 18 months versus borrowing some money and then you got to start making monthly payments on it right away.
Yes.
It hit different. Even if even if you're making those payments from the money that you borrowed, because I've done that before too.
Yeah.
Like, if I might have got like a 60,000 and I didn't use none of it, I just started making the monthly payments from the 60,000. But even still, since it's interest on it, you really didn't even get 60,000. You might have only got 40,000 because 20 of it is being paid to interest.
Yeah.
Wow. You mentioned how, like, it's a lot of different lenders and you're familiar with these different lenders. Some of them vary from like traditional banks.
Yes.
And we've heard you say things like Self, Credit Strong. And I'm sure there are a lot of other like online banks. I'm even familiar with like SoFi and stuff like that.
Got you.
With the rise of these new alternative lenders, I'm looking here, I see like 24% of small businesses are seeking financing from some of these online lenders since 2022, and in 2021 it was only 19%. So it's a rise now in these online lenders and these alternative lenders. Do you see that as a pro or a con as that starts to increase? Like, will there be more regulations? Will they start working with small businesses less? If we start getting past 30%, 40%, like everybody start going to them. What's your projections on that?
Well, I think it's great that money is now being more accessible in general. So for a business owner, an entrepreneur, you want to explore what works best for you, because some of these online lenders, they have different ways. Yeah, they have some different ways that they could really bite you.
Yeah, okay.
But what I usually recommend to like new business owners is to go with credit unions, because they're big on relationships, right? I have, not to put my business out there, but I have, PSECU. I have Navy, for instance. Navy Federal.
Oh, yeah. So all right, that's a PA one.
Pennsylvania, exactly.
Yeah, okay.
Yeah, exactly. So they have the business, they have the personal side, which I entered, and they also have the business, right? So building that relationship with them on the personal side, you can now gain access to their business products. So that's an amazing thing you want to leverage as somebody who's new, because their underwriting isn't as harsh as some of these other, major banks like the Bank of Americas or whatnot. So I usually advise people to go with credit unions. Now, that doesn't mean you can't go with like a Chase, because it depends on what type of program or initiative that some of these banks are doing. Like Chase, for instance, they have a big initiative on supporting minority business owners. So if you're a black person out there, you definitely want to look into Chase, because they're giving out a lot of money to minorities.
Wow.
Even with the online situation, there's some lenders that specifically tailored to just black women, LGBTQ community, all those stuff. So you want to look at those types of lenders as well, because they might not use the same requirements that I'm structuring for you in terms of getting funding. One good one is Ascendus. So they're based in New York. They're really heavy on helping minority business owners. You don't even have to have a 700 credit score. These people will give you $40K with like a 620 or whatnot. Like they're really out here just trying to help people, and it's real. There are a lot of more like opportunities available like that now, more so than ever. But you also want to be careful. You want to make sure, having the understanding that, like, are you getting a business loan or you're getting a business credit card?
Yeah, I think that's the biggest difference too. And like the more we talk about the differences, the more I am less attracted to business loans. Yeah. Because like you said, like one is the interest on the entire amount, and then it's like the clock start ticking right away. It's never no grace period with a business loan. And the interest can be super high too.
Oh yeah,
like we looking at 18. I even seen something as high as 24%.
Yeah, it's there.
24% interest is high as hell. Like let's get like
some like illegal cap.
Bro, that's like a quarter. You basically saying you taxing me on a quarter of how much I borrowed.
Hey man,
and even if I pay it back, like the next month, I'm still taxed on that 24%.
That's why you got to make sure you're reading the terms before you accept the offer. That's very important. You got to make sure the math is mathing. If you calculate, and you got to understand like what situation are you in. If you're somebody who's like, okay, I need this business loan right now to pay off perhaps my personal credit card, right?
Yeah.
And then get that business funding, because that's the only factor that is holding me back. Everything else looks great.
Right.
I just can't get money.
In that case, maybe 24% is worth you taking that huge utilization off of your personal.
Exactly. Because you believe in yourself, right?
Yeah.
At the end of the day, we believe in ourselves.
Yeah, I believe in myself, but baby, I believe myself. Hell no. You gotta take that belief and get a better credit card. No, that makes a lot of sense though. That makes a lot of sense. Mm-hmm. So in hindsight, the alternative lenders can be advantageous,
100%.
But you just want to look at the terms and kind of see what like is kind of like a case by case basis. Like, what's your scenario looking like?
Not all money is good money.
Not all money is good money. That's a fact.
You gotta weigh the pros and cons, and if it's working out in your favor, hey man.
What's a common scenario that a lot of the people who come to you are in, and like how like what's some of the most favorable banks or lenders are for them?
Oh man, it's kind of similar to the ones that I've mentioned. Chase has been very big. I know a lot of people who are getting 50, 75K. Just never had that amount of, you know.
At that point, you're getting your salary in a car.
Never seen that in their life before in their bank account. So those are very good. You mentioned U.S. Bank earlier.
Mm-hmm.
U.S. Bank, I've had some good experience with people going to U.S. Bank and getting funding, but the thing with U.S. Bank is not available everywhere. I think it's very geographically based. I know in Georgia there isn't a U.S. Bank out here, but in Tennessee there is one. So I encourage people to go heavy on credit unions because they're big on relationships. Go to Navy. This is America. Everyone can find somebody who's in the military. Okay, this is like the most militarized nation in the world. So
you got a cousin, nephew, somebody's in the military, and they ain't even active duty.
Exactly.
They're reserved.
My friend right now is in Syria.
Yeah,
shout out to him.
Yeah,
but everybody got somebody in the military. Navy's very good. They're the largest credit union in America.
Yeah.
They had this situation where it was like they would deny. The reports were they were discriminating against black loan applicants versus white loan applicants with similar scores and stuff like that. So sometimes, in my personal experience, they've been great to me. So
right, and I know quite a few people that look like me that have been hitting.
Exactly. So that's what I'm saying. It's weird how the news tells you one thing versus what your actual experience is.
And I feel like it's propaganda. It gets to a point where do you go to get accurate sources though? Because I feel like both social media and the news spread propaganda, and like 100%. When I mean propaganda is like just fear. Again, when you said like in the beginning, like we're so ingrained with fear, it could be because it really is the play, and now hold up. We can't let them think they can get away with this.
Exactly.
Sometimes I'm like, I gotta look at things differently, man, and side eye certain things.
It's like we were taught in school. You have to do your own research, right? Just because you watch something and someone said something, make sure you're doing your follow-up research. That's why I mentioned things like go on Google and search 15 USC 1681, because I could just tell you there's something called the Fair Credit Reporting Act, and to you that sounds like amazing. Like, wow, I could just like delete stuff on my credit report. This is not just what I'm saying. This is the actual law of the land. So do your own research, get educated. We have the internet. It's accessible to everyone. Learn these things, and definitely apply them, and the rest is history.
We definitely are in an age. We're in the information age for sure, where now we have access to more information than what existed 50 years ago.
Oh, yeah.
Right? So like when you think about that, and even now when you talk about like just the analysis paralysis and having data overload, you can leverage AI to even just bring a lot of the information you're looking for to the forefront.
Thank you for mentioning that.
Like you could literally, bro, just me prepping, and this is a game for other podcasters out there. Just for me prepping for our conversation today, I asked AI like, hey, what's trending, and like help me come up with a structure. And it still takes us the human to put together what the roadmap is, what the mission is. But AI will help you sort through and sift through all the data that's not relevant to you and pick the information that is. And so when it comes to
digital assistant,
the digital assistant, exactly. And while we on the trend of research, right? Like I was looking up some information, and some of the numbers that I saw were like 34% of small business owners have reported that high bank fees is also a problem for like how long it may take their business to actually start to see some profits and stuff like that.
Okay.
What are some of the strategies that you might have found for solopreneurs and entrepreneurs to be able to like remedy and get around those high bank fees, whether it's to avoid them altogether or kind of counteract it? Especially we talk about the balance sheet, right? Like how can we counteract the high bank fees and make it make sense?
Your income is your strongest engine, so you got to make more money. You gotta sell. You gotta. We have social media. We have Instagram. We have YouTube. We have TikTok. You have to have visibility to the audience out there, and there are a lot of people who need help with credit. There are a lot of people who need help with their LLC, and they need help with getting business funding. So yes, you have all these high interest rates at this moment, and the fees are out of hand. But at the end of the day, it's a lot better here than it is, from my experience, when I used to live in Nigeria. It is a lot worse over there. Over here, with the internet and leveraging social media, you could post content every day. Like my first month doing credit repair, even before I got on the internet, my first month I made like 5,000. And to me, that was so crazy because I used to be somebody of the mindset where like you needed to have the right government or U.S. president before you could actually like succeed. Like I used to think like it was impossible to start a business, especially being a black person, because there were just so many, barriers of entry. Like coming from Massachusetts, I used to like see so many, poor black people, and I used to just think to myself like, man, the only way is by working up the corporate ladder and just keeping your head down. Like it's impossible to start a business. Like it's just like you got to get into politics. You got to, you got to be more political.
Or become a CEO or something like that.
Exactly. That was the only way. But ever since doing this whole credit thing and seeing how much I can generate with my own hard work and effort, like especially in a state like Georgia, where it's more business friendly and more entrepreneurs are here. I mean, the rest is history. You understand that with marketing, social media, whether that's, just marketing yourself or doing paid ads, things like that, that will grow your business. And these fees that might seem large to you at the moment, in the future, you would consider those a blessing because you're like, at least I had funding to be able to grow my business, versus some people out there who are living in states where they don't have as much business friendly. They have so much regulations where you can't really start a business. And if you are starting a business, you're using your own money to grow your business, and it's almost a defeating experience. You just feel like it's never gonna be you.
Especially if you're making anywhere, and it used to be 100,000, but if you making anywhere under 150,000, trying to support your business, it's damn near impossible. And it's the slowest way to grow, because think about it, making 150,000 salary is like you're really taking home like 120 to 115, and then you even being taxed on groceries and cars and everything like that. Like just the lifestyle, prices. It's like you really only got about like, and then you got vacations. You still got the lifestyle.
If you can't afford a vacation,
you got kids. You got like, whatever it is. Like you just can't afford to live and support a business if you doing also on one salary.
Exactly.
So it's definitely. I'm glad we had this conversation, because leveraging, and I hate to I feel like OPM or other people's money is so like overused. It's kind of cliche. It's just being smart. It's just business,
Yes.
right? It's just like you said earlier, it's the language of business.
Absolutely.
Like all these other institutions, even the banks are borrowing money, and the main people they borrow money from is us. Like the
Trading
main
in the
people
stock
they
market.
borrow money and then charging
paid
us for the
us.
service fee, right? Like we gonna use your money and charge you every month for a service fee.
Don't hate the play, hate the game.
Hey man, I need to become a banker, man. I see I'm in the wrong industry. About to drop podcasting today. So man, Phil, you had mentioned a tool called Annual Credit in the beginning.
Yes.
I never heard of it, but you said you can get a free credit report. Is it monthly or what?
Yes. So
free monthly credit report.
So annual credit report in the past, you were only able to get a copy once. So from all three credit reporting agencies, you could order a copy just one time.
Oh,
but
just
now,
one time period.
Yeah, one time period.
Damn.
Like, and you would have to wait another 12 months before you could repeat that.
Oh, one time
process.
a year. Okay, gotcha.
Yeah, once a year. But now it's every 7 days you can request a copy. But the thing with annual credit report is sort of it's the best way to get a copy of your credit report if you're not trying to call the credit bureaus or whatnot. It's free, right? You don't have to pay anything for it. But the problem is sometimes you will get a PDF from Experian, but you won't be able to get a PDF from Equifax and TransUnion. They would have to mail it to you, and it could take up to 15 days, right? So that's, you get...
And I was about to ask, like, and you don't pay for nothing, right?
Exactly.
And I was getting ready to ask that, like, too, because I think my worry was, like, is the information actually accurate?
Oh, yes, it is.
It is 100%. Accurate.
Because it's coming directly from the credit reporting agencies. It's not.
Got you. So are they requesting it? Are they requesting it on your behalf? How are they able to get your...
Yeah, so you're putting your information on the website. And, it's going to ask you name, social security number, all that stuff to verify who you are. And then you're going to get a copy. Ideally, you want to get a PDF copy because it's, it takes minutes. You get that for Experian, Equifax, and TransUnion. But there's this glitch in the system where it would say they couldn't recognize you, especially with TransUnion and Equifax. And then you would have to call the number, which is routing you to TransUnion, and then you would have to order it over the phone, and they will tell you it could take up to 15 business days. So the alternative to that is there are many platforms that do credit monitoring. Identity IQ. You can check my bio on IG at Philagotti. I have a Identity IQ link. You can get a copy from there. Smart Credit.
Smart Credit.
Yeah, Smart Credit is one. I can't remember the other, but there's so many platforms now that are doing credit monitoring, and they give you accurate information on what's on your credit. Don't rely on Credit Karma, because Credit Karma is also a free platform. They only give you TransUnion and Equifax, and a lot of that information isn't always up to date.
Wow, and that's the one that's the longest running one that we even Credit Karma been around.
We had that since college, yeah.
And it's like that's not the first time I heard that about Credit Karma too. Yeah. I've heard numerous times from numerous sources that Credit Karma, the numbers that you're seeing is like it's like BS. It's like you go almost like, where did you even get this number from? It's not even like slightly wrong. It's like way off.
It's the way that they report the information too, because on the once you click on, when you're in Credit Karma in the platform and you click on like the profile for like TransUnion, it's gonna show you like payment history, utilization, total accounts, collection or derogatory and whatever inquiries. And it could be very misleading just relying on that initial information on the profile, because, for example, it could tell you have 100% payment history, but when you individually go into the accounts under your profile, you will start to notice, wait, it's reporting a late payment from 2018. If there's a late payment there, why is it saying I have 100% payment history? So you don't want to rely so heavily on a platform that is free, like a Credit Karma, because the information, they don't, you're not paying them for accuracy. You're just paying them for convenience. So that type of information could hurt you when it comes time for funding, if that's what you're relying on, because there might be a late payment somewhere that you're ignoring, and the lender is definitely going to make sure they know about it before making a decision.
Yeah, man. I don't think I would ever rely on Credit Karma. And and even going back to the annualcreditreport.com, it's so funny how like growing up we were taught to like be so guarded of our social security number. But then you think about it, you really think about it, it's more and more third party companies that we just willy nilly just put our social security number into, all the information. Is like you never know who gonna be subject to the next data breach. And I'm not trying to push fear into anybody's, but like when I think about it, I would much rather just do the work of going straight to. I'm not trying to, I'm gonna go straight to the horse's mouth. Say, hey, you are the ones you are directly in between me and what's on the other side of getting that money. I'm just gonna call you up directly and give you all the information you need. Make sure everything's being reported accurately. F going to these third parties because they already third party themselves, the agencies,
and that's true.
So I'm going to another third party to get to the third party.
The fourth and fifth party.
Yeah, I'm going to the fourth and fifth party.
But like, it's convenience too. You have to when it comes to credit repair, right? Having to sift through documents versus looking at a platform that is user friendly and just easily highlights the inaccuracies on your credit. Sometimes it's easier to navigate that way versus having to put sheets of document next to each other to compare account information across the board. So it's good to have both. It's good to understand the pros and cons of both sides, right? Annual credit report, that's fine. They're going to give you accurate information. It could take a while to actually get the information. If you're somebody who wants to get it from the horse's mouth, call the credit bureaus, but that also could take a while before they actually get you the report. And sometimes, it gets hard to dispute that information when you're trying to compare information across multiple reports versus just having an online platform that already simplifies that for you. All you got to do is just click a button and just hit send.
Yeah, I mean, that's a good point. When it comes to convenience, all right, it definitely makes people will pay for convenience, and even if that paying is like the time, So when it comes to convenience and accuracy, what is like some of the like the best tools that you've used out there that provide the convenience of seeing everything all on one platform that you need and is accurate enough for you to make an informed decision on what you need to do next?
Definitely Identity IQ.
Okay.
Identity IQ, I still have one. Even though my credit is great, I still have it active because what it does for you is monitoring as well, right? Annual credit report is not monitoring your credit report. They're just giving you your report. The credit bureaus, they're just reporting any information that they receive from whoever, and they put it on your report. But these services like Identity IQ or Smart Credit or MyScore IQ, they will alert you in your email if something fishy is going on. So if a new inquiry has popped up on your credit report, you will get an alert in your email notifying you. So you're like, wait, I didn't apply to any credit card. Like, why do I have an inquiry?
Is it just fishy, or like would you get an alert for anything that hits your credit profile?
Anything.
Okay.
A new account,
I like that.
A late payment, all those things will populate in your email, letting you know like, oh man. And then that gives you more, time to actually address the issue versus being blindsided if you're only pulling your credit like once a year from annual credit, or just calling the credit bureaus on a whim just to check on your credit report and see what's up. So you want to have a credit monitoring platform that will alert you, especially as a business owner that is leveraging your personal credit. So whenever anything happens, you can take action and take care of the issue before it gets worse down the road.
Man, I mean, sound like they need to give you an affiliate because you did a good job selling that to me. What's something like that? Like I'm sure that's a monthly. That can't be a free service.
No, it's not.
Identity IQ. What would a consumer look at paying monthly for a service like that?
So it's around $29.99 per month.
That's what I thought. That's cheaper than Experience Premium plan. Right?
Exactly.
That ain't bad.
Yeah.
That ain't bad. Man, Phil, it's been a pleasure having you on here. I feel like it's so much that we really didn't get a chance to scratch the surface on, but I think this was a good start for our audience to be able to kind of see what to do next. Go ahead and tell our listeners a little bit where they can find you and how they can more so get plugged in on, how to even get you to help them get that funding and to kind of, get started on their credit.
Oh, absolutely. So you guys can find me on IG at Philagauti. That's PHILAGODI. It's the same from my TikTok as well as YouTube. I give out plenty of free information on these platforms. You can reach out to me directly on IG if you need help with your credit, if you're trying to join my mentorship. And I'm actually going to be giving out a lot of free game these next few weeks. It's going to be a free masterclass on the fundamentals of how to build your credit, how to fix your credit, structure your LLC, and get business funding. Okay, I'm going to be dropping these free masterclasses every Thursday, so definitely want to check it out. The link in my bio will give you plenty of resources as well. If you want to check out Identity IQ and sign up and get an accurate, representation of your credit report, you can, check the link in my bio as well for that.
Coolio. Phil, again, it's been a pleasure to have you on the show, man.
Absolutely.
Really appreciate you taking time out your Saturday to come join us.
Yes, sir.
And to our listeners, I appreciate y'all tuning in every single Monday for new episodes. Make sure y'all comment below what some of y'all experience has been, dealing with some of these banks. If you've been, actively trying to get funded for your business, or, just to, fund your lifestyle, like getting a home or, vacations and cars and whatever the case may be. Drop what your experiences have been like with some of these banks, some of the banks that we might have even talked about, or some that you didn't hear us talk about that you had a great experience. Make sure you do the audience a favor and, don't gatekeep. Share the information, all right? Exactly. We don't gatekeep over here, and Phil definitely did not gatekeep. He gave us a ton of great information. So without further ado, we're going to wrap this episode up. Y'all enjoy the rest of y'all day and stay blessed. Peace.
Peace out.